Welcome back. You're watching Investors Guide on ET Now. Thank you for staying with us. It's time for us to look at some of the tax questions you sent in during the week. Suresh Surana joins us now to help us with all of those tax problems. Suresh, our first question comes in from Rajesh, who's a superintendent at the Central Board of Excise and Customs. Now, he writes in saying he's learnt that someone with an income of less than 5 lakh rupees has to file his taxes online. Now, he wants to know, does the limit of 5 lakh apply before claiming that 1 lakh deduction or after? Suresh, what should he do?
Yes, Mr. Rajesh, you are right. The requirement of e-filing of return is now applicable to all those individuals and HUFs who have income, who have total income exceeding rupees 5 lakhs this year. That is the financial year ended 31st March 2013. Last year, this requirement was applicable to those individuals and HUF who have total income exceeding rupees 10 lakhs. Now, this total income has to be computed after allowing the deduction under Section 80C as well as other deductions under Chapter 6A.
Our next question comes in from Priyank, who just bought a second property in the Delhi NCR region. He's taken a joint housing loan with his wife and he'll get possession of this property next year. Now, he wants to know if he can start claiming the tax benefits on that property pre and post possession. He also wants to know if he decides to rent out this property, will this change the way it's treated under the tax laws? Suresh, what should he do?
Yes, Mr. Priyank, you have raised several questions. The first question is the interest and principal amount, what you are repaying during the construction period. So whatever principal amount you are repaying during the construction period is not eligible for any deduction at all. The interest amount, what you are incurring during construction period is not eligible at that point in time. However, once you become the owner of the property, in next 5 years, you can claim it equally as a deduction. And also, once the property is completed, you can normal interest, whatever you are paying, also you can claim it as a deduction. The total interest, what you are paying ongoing as well as the pre-construction share cannot exceed 1.5 lakhs in case of self-occupied property. For the property which you are letting it out, there is no limit of 1.5 lakhs as far as interest is concerned. You can claim any amount, whatever you are incurring on payment of interest and adjust it against your rental income.
Our last question comes in from Shri, who's written in because he wants to understand Section 80DDA a little better. Now, this is a deduction that you can use in case you're looking after a handicapped or a disabled family member. Now, he wants to understand, Suresh, what the maximum limit is under this deduction and how can he claim it?
So, first of all, the deduction under Section 80DDA is now substituted by Section 80DD. And the deduction is allowed of a lump sum amount of rupees 1 lakh if the person is suffering from a severe disability. Severe disability means more than 80%, the way based on the handicap they have defined what is the extent of disability. In case the person is having disability between 40 to 80%, then you get 50,000 rupees as a deduction. This deduction is allowed irrespective of whether you incur expenditure or not. So it is a notional deduction and it is lump sum allowed irrespective of expenditure being incurred or not.
Alright, so if you have any questions about tax, write to us. Email ID is at the bottom of your screen. Suresh, thank you so much for answering our questions on Investors Guide. Remember, we are specially partial to our female viewers. Send in any question you might have about your money. Tune in next week to catch the show. Thanks for watching.